40,700. Again, I can do that arithmetic on my head. By the way, people say that's math. No, that's just arithmetic. Math is things like calculus, topology, abstract algebra. Multiplying two-digit numbers in your head is not being good in math. That means you can calculate things. By the way, why is the $25,000 not relevant for this problem? Because that's the market value of fixed assets, okay? We're looking for book value. By the way, you may get some of these problems in your quiz. This is a very large test bank, but there's a finite number of questions. So by chance, even if you do only one attempt, you may get some of these. So pay attention.
Is it 26 also? Or
Huh?
Is it more than 26 or is it 26?
26. You'll always get 26 questions, at least for this chapter. For future chapters, sometimes you have 21. Remember, the first one is just ID number, so technically it's 25. And there is no time limit in these quizzes. You can start them, give a 2-hour break, come back, do it 2 days later. As long as you are done at the time of the deadline, you're fine. And once the deadline hits, you cannot start a new attempt, but you can finish an existing attempt. Again, we're looking for book value. Let's roughly go through it. They bought it at building 76,000. It's currently valued at 212. So for our purposes, it's not relevant because that's market value. Their other fixed assets cost 58. Again, valued at 69. That is irrelevant for us. They recorded a total of 83,000 depreciation on various assets. The current liabilities, net working capital. What's the book value of assets? You can directly calculate book value of net fixed assets, how much the building was purchased at, and how much the net fixed assets purchased at, less accumulated depreciation. The only thing you need to add is the book value of the current assets, but you already have net working capital and current liabilities. Current assets are equal to net working capital plus current liabilities. So you're going to add 43 plus 32. Since we've done similar problems, I'm not going to go through the details of that in the interest of time. And these are numerical questions with an open-ended answer. But as long as you're within that tolerance level, Blackboard is going to automatically grade it. That's correct. But I always go through these things manually as well for 2 reasons. One, sometimes you're close enough, so I give you either the whole thing or something. Sometimes it's obvious that you are numerically speaking dyslexic. The answer is 213, you wrote it as 123. I give you the benefit of doubt that you switched the digits. Maybe you didn't, but hey, I'm a good guy. Trust me, 20 years ago would have killed you. As I got older, I got mellower. And as I had my own kids in school, I can empathize better with students. I mean, if you're gonna die in this class, I don't want you to die because you possibly switched the digits. I want you to die because you don't know crap. I can live with that. And then they come, I switch the numbers. there is no way I can actually believe or not believe. There is no evidence. So I take the honor code. I assume you switch the numbers. That reduces unnecessary office hours quite a bit. About 10 years ago, half of my office hours were objections to how Blackboard graded their numerical questions. It's there. I don't do it manually. Now I do. Okay, we're looking for copy. All right. We're looking for cash flow to creditors. Oh, this is not Spanish, so it's not creditores, which is interest expense minus net new borrowing. Alternatively, cash flow from assets is equal to cash flow to stockholders plus cash flow to creditors. Sometimes information helps you to solve the problem using the first definition, sometimes the second. So let's see what we have. We know what they pay in interest and dividends. They issued that much stock, and they reduced the balance of the all debt by that much. It looks like we're gonna do it from here. So how much is the interest expense during the year? Just read it off. Come on, guys, a sophisticated tomato can read that. 213,000. These are not hard questions. Okay. Now, let me also define net new borrowing. New debt minus all debts paid. So in this case, how much in new debt they issued? 205,000. How much all debt they paid? 292,000. So net new borrowing is negative 87. That means on net they actually paid. So cash flow the stockholders, creditors, I'm sorry. Not that one. $213,000 interest expense minus 87,000. Again, I know that makes it into a plus, but I'm anal about these things. I let the computer decide that minus is a positive. That's $300,000. Okay. Cash flow to a creditor means on net you gave money to your creditors. 213,000 in the form of interest, 87,000 in the form of principal, basically. Any Stargate fans here? You guys are too young to even know the show. When that show started, I don't think any of you were born. It started in 1996 or 97. You should check it out. It's on Amazon Prime. It's called Stargate SG-1. It's kind of a silly show, but you know, it's sci-fi. There's this all circular object. Supposedly forms a wormhole between different planets. You can travel to a planet 500 light years away instantaneously. Then you have other species. Chulak is one of those planets. Each chapter, open answer questions, refer to some sort of show or mythology. I come up with the names of the companies that way. This is a similar problem. Let's see. Again, we know total assets, we know net working capital, we know total equity, long-term debt. We can figure out total liabilities. Once I know total liabilities, net working capital is gonna give me current assets and then current liabilities. So I'm not gonna work on that because I'm kind of running out of time. The idea is similar. Same idea. Why aren't we getting any income statement stuff? Okay, let's do this. All right. We know total equity at the beginning of the year. During the year, company had after-tax income, which is net income, 4,200, of which 2,300 was paid in dividends. They repurchased 2,300 worth of stock from one of the shareholders in exchange for bonds that can be converted into shares.